Hi everyone. Thank you, Sam. Welcome to another Sunday market update. My name's Geoff Pine and I'm a senior trader with Actions to Wealth, who bring you this weekly Sunday market update each and every Sunday. Unless it's Christmas. We have Sunday and Christmas? I haven't had that for a while. No, we have a Christmas holiday, a couple of weeks off during the year, but thank you for joining us and we hope you get something out of this session, which of course will include Ash and myself. Ash in Brighton, just a little bit out of London, and myself in Tasmania, just a little bit out of Australia. No, it's actually part of Australia. It's across a bit of a strait that protects us from all the other Australians down here in Tasmania. I think we'll just go straight to Ash and give him our sympathies, I suppose, for being actually a part of Great Britain, which you just shake your head, I guess, and say, well, mate, what's going on over there?
Oh, I mean, it's the big question. The problem is we've got a party that are in power that are infighting, and there's a direct split. You've got with a lot of these parties as they kind of progressed. Labour Party and the Conservative Party, the two big ones. The Conservatives on the right, Labour on the left. And as with many of these parties, what tends to happen is that you get a not far right faction, but you do get a right. They sit on the right hand side, and then you get the kind of centre right. And as modern kind of politics started to progress, more of the centre right and more of the centre left in the Labour Party started to gain some traction. And that's really what's going on. So we've got a direct split right down the middle with the Conservative Party, those on the right that really love Brexit and wanted Brexit to happen, that are supporting Boris Johnson, and those in the centre right that didn't really support Brexit. They're sort of, midway on it, and they are supporting Rishi Sunak. And of course, you've got, Boris Johnson, incredibly divisive, but probably their best hope of winning a general election. Probably might not be the case. We don't know what Rishi Sunak's going to bring to the party, but we know that
on that basis, they're probably likely to consider his reinstatement. Do you think
they are 50-50 currently? So
wow.
they need 100 MPs to vote for them to actually put them into the race in the first place. But apparently it's a 50-50 split. And what's currently going on is Boris Johnson is reaching out to Rishi Sunak to try and, strike some sort of deal. Now, Rishi Sunak was one of the main people that ousted Boris Johnson in the first place. It was him that sitting as the most powerful man after the prime minister was the one that said, I can't be on the same government with this man anymore because he's dishonest and he's leading the country down a path that we don't want to go down. So we are in an economic situation. There's economic situations right across the globe that the United Kingdom's probably worse than most, and Rishi Sunak is an ex-chancellor. So I think people would trust him. The public would probably trust him more than they would trust Boris Johnson. But as I say, mate, Boris Johnson's got incredible support because he's incredibly charismatic. And people forgive a lot of mistakes with people that are charismatic. That's just the way of the world. It's human nature. We saw it with Trump, and we saw it with many leaders in the past. Charisma does actually count for potentially, over 50% of popularity, which is unfortunate, but that's just the way it is. So Rishi Sunak, to be fair to him, isn't dull and dire and grey and he's got a character, he's got personality. So it's not that he lacks charisma completely, but Boris Johnson's on a completely different scale. So Absolutely. We'll see what happens.
Richie actually does comb his hair, I noted. Speaking of which, it would be very, very interesting if in let's say, I don't know, when's 24 would be the next federal election in the States. Is it actually possible that we could turn the clock back and have Boris Johnson and Donald Trump in power at the same time once again.
Everything's possible, mate. I mean, and this is the thing, Paul was asking me the other day, Boris surely hasn't got a chance, has he? And the thing is, you can't write these guys off. It was really to our detriment last time that we kept saying, no, this isn't going to happen. But you can't write them off because you don't know really who's pulling the strings. The people on the street don't decide what happens in power. And we saw it with the markets. Liz Truss came out with Kwasi Kwarteng with a policy announcement that the markets didn't like. The markets crashed. Yep. The bond market crashed. He was out within a day or two. She was out within a week or two. 10 days she was in power or something. Shortest ever living prime minister. So, shortest serving. Sorry, Prime Minister. So it's not us that decide. The market decided really what was going to happen within government. So when you look at that, when you consider that, you have to really understand who do business want. Who does business want in power? Because that will probably enable us to get closer to making a more informed decision about who would be there. Now, the fact that Truss beat Rishi Sunak in the first place suggests that they don't really want Rishi Sunak. So you can't write it off. You cannot write Boris Johnson off. He's got incredible support in probably the most important places.
Well, I guess we're going to see as that story unfolds and as we get closer to a decision on that. The FTSE maybe a little bit volatile, maybe the pound a little bit volatile.
Undoubtedly. Yeah, I mean, we got Monday's the day that we know.
Not that the pound's not already.
Well, exactly, mate. I mean, I'll show you sort of if we were to look through some of the data, and the data's quite interesting because what the data doesn't give us really this week is a clear idea of what's going on and what's going to happen. And this is the pound. So if we consider the pound, and what the COT data is telling us, this is the net positions. So the net positions have been selling off. Now, this obviously is reported Tuesday to Tuesday. So the last 3 days of the week, particularly the last day, all of a sudden saw a rally in the FTSE, and it saw a rally in gold. It saw a rally in the Nasdaq, while the dollar was going in the opposite direction. So these guys were positioning for something different than what happened on Friday. That's the first thing to kind of note. Now, the question really comes in, if that's the case, does that mean that either they're wrong and they started to flip positions again between Wednesday and Friday, or even, from now until next Tuesday? Or does it mean the longer term picture is still intact and we should probably still be looking for short opportunities with things like the pound? And you could go through it and see the same thing. Look at the yen. Now, the yen's another interesting one. Big selling on the yen sort of Tuesday to Tuesday. But what we also saw with the yen was some policy which came and said that the yen has got a chance to start to rally. And, that also starts to flip around the COT data on this. But the COT data set says that the yen is still weak. Now, if we go to the dollar index, which is really, the behemoth and the one that we should be really looking at, it also suggests that it's relatively stable. The COT data is suggesting that the dollar is relatively stable. So the question really is, was Friday a knee-jerk reaction, or was it something a little bit more significant? Now, people are looking for reasons to get out of the dollar. They're looking for reasons to support the yen. They're probably looking for reasons to support the pound and the euro and other things as well. So other things against the dollar, gold included. So any little announcement that gives them a reason to do that, then they're going to start buying it up. Now, the only thing that I could see that would change the mood music a little bit on Friday was that Bullard, Fed Governor Bullard, came out and said that the chances are that there will be some change of the rate decision in 2023. So people are now positioning themselves for 2023. Inevitably, that the dollar, the speculation on the dollar is that the interest rate goes to 5% from the Fed. That gets priced in. Now they're looking for a reason that won't happen, or the 5% is the absolute ceiling. And if Bullard comes out and says that, then that starts to drive the market. So what we saw was a knee-jerk reaction. Sure thing, Lexi. Yeah. So the data is showing us that the dollar is still stable. So COT data showing us the dollar is still stable. The buyers are still really in charge of the market. You look at the yen, it's telling us that the sellers are not only in charge, but they are adding to positions for the yen, or at least cutting back even further on the longs, because this is the net position rather than long or short. And the pound is the same. So it's suggesting that the pound and the yen are seeing further weakness from the COT data. Euro, different picture, which is interesting, because if we are considering kind of going long on something against the dollar, the COT data would suggest that we should be looking at the euro. If we are considering going something against short against the dollar, the COT data suggests that we should be looking at the pound and the yen currently. So that's quite an interesting dynamic, that at least it's not all out and out dollar is strong. You know, what we're seeing is the dollar is around about stable. You know, the buyers are still in charge, but it's around about stable. Now you're sort of like saying, well, what's the weakest and what's the strongest? The weakest coming out looks like the CAD, looks like the pound, looks like the yen. So if the dollar continues strength, they're the ones that we want to look to short against the dollar. If the dollar is to start getting weaker, then we want to look at the euro in accordance to the COT data. The seasonal charts, unfortunately, give us a different picture. Actually, before we go to the seasonal charts, I'm going to show you the Kiwi. Again, Kiwi. And now these are down at extreme levels. Now, the one thing that is notable here is that while we're down close to these extreme levels, the next moves can be extreme in themselves. So the next move could be a hop. So what we might see in the COT data next week is it release. So all of a sudden the buyers came in. Now that doesn't mean that we have got confusion. Well, in a way, what it suggests is we need another week. We need another week before we can really hang our hat here and say, okay, the dollar's about to come down, and because it's got so much room, then there are opportunities for us to sell the dollar and buy up other asset classes like the euro, gold, silver, and possibly the Kiwi, because the Kiwi down at these levels suggests that a flip around could be quite extreme. The yen down at these extreme levels suggest that the flip around could be quite extreme. You know, these are quite big jumps in data when we get down to these extreme lower levels. So that could be sort of something to watch out for. It's not suggesting that is going to happen. It's just suggesting that that's something that we need to watch out for. If we are going to follow COT data, then it would suggest that we shouldn't be trading the yen long this week. If we're going to look for COT data, we could sort of like, you know, ease into the euro, but the yen and the Kiwi and the pound are out really for us this week. Now that does mean that we could miss an opportunity, but it also means that we could stay safer while we wait for the data to kind of catch up with what we believe, then look for opportunities. So waiting a week doesn't mean don't trade. It just means that look for those trades to potentially be a little bit more short term, because volatility could still be high. And then the following week, we could get a clearer picture. Then we could maybe put something that we put a position on that we can hold on to for a week or two or three or four. So that's what the COT data is telling us. Now, if we go to the seasonal data, is telling us that the Kiwi over the course of the next few weeks is relatively flat to moving higher. Now, I'll remind you that the Kiwi's COT data was weak. So what that is telling us is if the COT data then starts to bounce up, the Kiwi's a really good option to try and go long. So if we wait a week and wait for the COT data to kind of turn around and see if that's going to hold, because they've got plenty of days to buy. You know, they've got Monday and Tuesday as well before we start to see the result. Then we could have a bit more confidence that the Kiwi is going to pop to the upside. If we flip it now to the DXY and see what happens with the dollar, what tends to happen, it tends to strengthen up until around about the second week of November. Then there's a little dip. So we're sort of, again, we're getting close to that point. The seasonal data says don't fight the dollar. The COT data says don't fight the dollar this week. So you could be taking a position of slightly higher risk. So that means that you need to make sure that the money management is correct. Now, if we then look at the chart, we finally sort of like finish on the chart and see what the chart is telling us. The Dixie, the dollar index, last week hit a relatively significant bar, but we didn't break down. We're currently right along that monthly pivot. This is, if we go in accordance with the COT data, I mean, you look at the daily bar on Friday, very, very negative, but we are not through this trend line here. So we need to clear that trend line first. Now, really, what the cotton seasonals is suggesting is let the trend line break and retest over the course of the week, then look for opportunities next Monday. That's what that's suggesting. I'm not saying that's what we should do, but that's what that's suggesting. Bringing it in then and saying that, okay, if you were desperate to go this week, we didn't look at Euro seasonals, but the Euro seasonals aren't very strong either for the week coming up. You look at this euro, same sort of thing. This is an accumulation pattern down here with this inverted head and shoulders. And again, we're on top of the neckline here. So why would we trade this currently when we don't need to? We can wait for this to break and retest and then start to look for the upside. Because if the charts don't match what the data is telling us, then we shouldn't be trading it. What the data is telling us is that we should still be going short on this, but the chart is not really agreeing with that because of the very, very bearish move we had on Friday. So they need to line up. So if we consider the COT data, the seasonal data, and the technical picture right now, it's confused, and confusion tends to come before decision. So is the decision going to be, let's now sell the dollar off and allow these assets to start to grow? Or is it going to be that we are nothing to see here when we're back to where we were before? And while we're sort of here with the euro, that would also suggest kind of breaking down this particular level here. So there's a few things to consider. Yes, Lewis. Lewis is asking, will the midterms have any effect on the dollar? And yes, they will. What effect, we don't know. So that's the reason that we need the technical picture to kind of give us the idea of what the midterms are saying. The COT data is not giving us that right now. Seasonals aren't really giving us that right now. But what we have seen on Friday is a significant move. That was a decent move. Is it followed up by another Fed speaker coming out and reiterating the same thing? Is it followed up by a Fed speaker coming out and saying, no, that's just Bullard's decision, Bullard's opinion. That's not what's going to happen, because that could change things this week. And you need to now look at the fundamentals for the week and say, okay, well, what could move the dollar this week, and what's the day that we could start to see some price action happening? So patience is the key. I mean, I know we always say it, but I think particularly this week with things out of sync, patience is going to be really, really important, and it's going to be really. I think sort of this will define for many traders how professional that you can be, because being professional does mean that you wait for things to line up in your favor, or that you're very clever with money management and you can accept that the chance of being wrong is quite high, without other things kind of lining up. But I kind of want something fundamental to back up what Bullard said, or the technical picture to back it up. And right now we haven't got either. So that's what we got, mate. That's what we got.
Yeah, cheers, mate. I think listening to you go through the dollar index in particular, I'm going tick, 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 and everything that the data is suggesting, which is just hang on for a minute, is lining up for me technically as well. And that'll be the first chart I look at in a minute. But thanks for all that, and have a wonderful rest of the day, mate. We'll catch up tomorrow in Trading Buddies, right?
Yeah, certainly will, mate. I'll see you tomorrow. Sharp at 8 in the morning. Don't be late.
You bet. So, yeah. Have a good one, man.
Thanks,
All
buddy.
right.
See you guys.
Speaking about the dollar index, a slightly different slant on it. I do have, and we've been talking about, Ash and I have been talking about this level for weeks and weeks and weeks, and anticipated that we would have a little bit of a pause here, if nothing else, a pause. And that's pretty much exactly what's happening. You can see really that this is the last line of defense for anything against the US dollar, this being the dollar index, of course. So my slant on this is that time and those data projections are suggesting that we don't do too much at all. If I go in a little bit tighter on this, you can see that level, which is 113 at the end of the day, has been the flavour of the last 3 or 4 weeks. Certainly the month we actually, that rally closed bang on it, and we haven't been able to decide which side of it we want to be since. That's a month ago. This chart here is the one that I'm most interested in, and it's the daily chart. And to me, it's suggesting that price doesn't want to go below 110 and it doesn't want to go above 113. I've narrowed that range down a little bit into 112 to 113. So there's 100 units in there. And I think the best course of action for me certainly would be to play this range until proven otherwise. And that would be obviously for me initially a break of that. Well, there's a confluence there really. Ash pointed that trend line out and it's perfectly valid. And it coincides beautifully with the bottom of the range and pretty much the monthly pivot. So until I see that break and be retested, I'd still be looking to trade that in a range. So what I'm saying is dollar long this week. Do I want to trade that as a entry? No, I don't. I certainly want to see some proof that that can be the case, and that would be with a higher low on this chart for sure. So not looking to trade that at all until we see proof against that or for that. Breaks down under here and retests it, then different ball game, and we're headed for here 110 or 109 rather, which is this level, this next level down here. So convert that into anything like against the dollar. My favorites are not currencies at the moment, I've got to say, because they're very, very difficult to trust, in my humble opinion. Can you trust the euro, really? It's been as weak as lolly water. Can you trust the yen? Same, if not worse. Can you trust the Aussie? It sits under pressure because really of the RBA. The CAD, oil's falling or had a little bit of a rally back. There's an interest rate decision on that this week. That's pretty tough. So where do you go? I take Ash's point and I'm headed towards the Kiwi, and we'll have a little look at that in just a tick. But there are half a dozen or so, maybe 7 or 8 game changer bars this week, and that's of course where I start my week. The first of them is indeed Euro CAD. I'm actually long Euro CAD at the moment, so I don't like that candle at all. I was playing a break and retest of this level, and on the back of a double bottom higher low scenario. Certainly not out of that at the moment, but this candle suggesting that we do go short. I think it might be prudent of me to put a short entry underneath that bar just to get a little bit back if this does go south. Then it's probably going to get back underneath that trade line. So I'll be considering that. I won't be trading anything outright until I see what the market does when it opens, of course. The gaps in the market can make a big change to what these game changer bars actually mean. Here's my favorite of the week, though, and it's Euro Kiwi. I'll go to my analysis chart to show you why. And it's all to do with that broadening pattern. If I go a little bit wider, you'll see where that's coming from. And we seem to have come off the top of that with that massive move on Friday. Of course, I don't want to play that bar because it's too big. But what I would be looking for on the daily chart is a break of that monthly pivot and then a retest of it, or a lower high up in this vicinity somewhere off the double top, off the top of that range. So that's number one on my watch list for the week. It's Euro Kiwi short, and either would do break and retest of the monthly pivot or a lower high. that's what I'll be seeking on daily charts and maybe even 4-hour charts as we get into the week. I think that's the best of the game bars. If you wanted to trade it, then by all means, I don't think you're going to be in too much difficulty. I think down here looks to be a pretty good prospect down to, and you got about 500 points till you get to there, and your risk is probably 200. So if you want to trade that, happy days, but I'll be waiting for proof that that is going to follow through. The next one is pound Aussie. Look, I just want to steer clear of the pound at the moment. I think it's really, really difficult to trade because of the situation with prime ministers and my goodness, what a mess it is, as Ash has pointed out. And I expect volatility here. Look, it may be a good thing to trade because of the volatility, but you need to get your direction right pretty fast, and you need to get out of there pretty fast, I believe. But I'll be leaving it alone. It does have a big broadening pattern similar to the euro versus the Kiwi, but I just can't trust it, so I won't be doing anything with it. The next one is pound Aussie, pound CAD. Pound CAD, I'm also in a little bit drawdown on that one as well. It is suggesting that we go short, but it's really more a spin top than a reversal bar. So once again, with the pound, I'll just be holding my position and doing nothing more and looking to the stars and going, help. Pound Swissy, exactly the same scenario. It is a game changer bar to the downside. Interesting technical level, this one. We have a look at the monthly chart. You can see that we are at a strong support level and we're retesting that support level. Can we actually expect this to go further down? Well, it hasn't been there forever. My opinion would be that we're going to stall here for a little while, similar to what we've talked about on the dollar index. But a bear bar here would get me interested long. So in other words, I'm looking for a higher low to be able to trade that long. The game changer bar is suggesting that we go short. I don't disagree with that, because that would ultimately give us the opportunity to produce a higher low. I don't think we'll be trading the bar, that's for sure. And like I said, the pound is very, very difficult to trust at the moment. On the smaller time frames, if I was looking to trade this at all, I'd be waiting for that to become a false breakout of this level. So price underneath here, retest it and trade it back to here and look for that lower high on the weekly chart. What else have we got? Pound Kiwi is the last of the game changer. Oh no, there's two more. Actually, pound Kiwi on the weekly chart suggesting that we do go short. I was actually in a short on this early in the week and maybe got out a little bit earlier than I should have. Although if you look at the daily chart, I had good reason to do it. Well, you may not think I had good reason to do it, but I did have good reason. I made money on it and moved my stock to entry too early, and that's proved to be a bad idea. I think as far as the game change is concerned, the directional bias is correct, but again, I want to see a lower high before I trade that. That looks a bit off a lower high. That would be the way I want to go. So pound Kiwi short. Dollar yen is the last of the game changer bars this week, and more of a spinning top than it is a reversal bar. Look, it's like throwing darts at a board and going, okay, is this the time that I'm going to hit the bullseye, really? Because this thing's just going nuts. Dollar yen since, what, 2020. Let's call it COVID. This is a COVID curve, if you like, and it's just gone absolutely nuts since then. The yen so weak. Ash alluded to the yen potentially getting a little bit of strength about it, and this bar is suggesting that may well be the case. But really, to trade that short there is like trying to pick the top of the market, and as we know, that is a very, very dangerous position to take. If you waited, and this goes back to the dollar index as well, wait and see what happens. And Ash was saying exactly the same thing. Wait and see what happens with the dollar index. And if you find that you get a lower high here, then maybe you've got an option to trade it short. But really, it is super overbought, no question. But to trade it short right now is taking your life in your hands, in my humble opinion. There is one more, and it is probably the one I prefer more than any of the currency pairs outside from the euro versus the Kiwi, and it's gold. Gold versus the US dollar. Again, going back to that dollar index chart, you need to see proof that this can turn around. And I don't see any reason why gold can't go back to this level here, which is circa 1700. 1700 would be where I'd be looking to trade gold to this week. Nice little double bottom sitting there. Higher low, that's for next week. Daily, you've already got a bullish engulfing bar. You've got the monthly pivot in your way. I wouldn't be concerned about that because the entry can't come for me as an entry here. It can only come as a higher low. But if you wanted to take the weekly game changer bar on, providing there's no big gaps in the market tomorrow, I think it's a reasonable trade to take, frankly. You could buy it here above the bar. If you go a bit tighter, you've even got a wick to come off. You get your entry above the monthly pivot. You get your stop loss below here or here and get some profit in the bank at that level. I don't think that's the worst trade by any stretch of the imagination. And outside of the currency pairs, I think this is the one that I would prefer to trade. Short term only, because this trend line here and the bigger picture is certainly not bullish for gold. There's no question about that. But short term, I think there's an opportunity there for us. And the other one is its silvery cousin, a silver versus the US dollar at a massive, massive confluence area. And we flagged this last week as a range trade coming off that level. Got back inside the range and didn't really give us an opportunity to trade it, but you can see the result of that. Now, a higher low, pulling back to the monthly pivot would be perfect if you can get maybe Monday, Tuesday bars coming back to the monthly pivot there and giving you a rejection bar of that level. I think trading silver to the top of that range makes perfect sense. Silver didn't quite qualify as a game change bar because it's inside the previous. But again, it's strong on my watch list. So the three I want to be very, very keen about this week are Euro Kiwi short, gold and silver versus the dollar long. But I need to have those setups, of course. We shall see how they pan out. Maybe on Tuesday or Wednesday we can look to get into those directionally. I'm pretty convinced that that's the way they're going. All right, guys, that is it for Sunday market update for another week. My thanks to Ash and Sam for looking after me, and my thanks to you for being part of our weekend. Have a wonderful rest of it and a wonderful and profitable week ahead. See you later.